Silicon Valley Bank Financial Group lost 60% of its value after announcing plans to raise up to $1.75 billion to strengthen its financial position amid concerns about higher interest rates and the economy. European bank shares dropped dramatically this morning after SVB Financial Group's announcement it needs to raise up to $1.75 billion, spreading fears across the globe. Bank of America, Citigroup, and other big banks also fell sharply. Global stock markets and Wall Street futures fell on Friday ahead of a U.S. job market update amid unease about possible further interest rate hikes. Markets in London, Shanghai, Frankfurt, and Tokyo declined. While oil prices were lower, Wall Street's benchmark S&P 500 index fell on Thursday by its biggest one-day margin this year after Federal Reserve Chair Jerome Powell warned rates might be raised faster than expected to cool stubbornly high inflation. Traders looked ahead to U.S. government hiring data due out Friday after other indicators showed the job market has stayed strong despite repeated interest rate hikes. That is good for workers, but Fed officials worry rising wages might fuel inflation. That might lead to more rate hikes to dampen business activity and hiring. Rubila Faruqi of High Frequency Economics said in a report Fed officials were clearly messaging that rates will move higher. The Fed's inflation-fighting policies risk slowing the economy too much and pushing it into a recession, while also going too far in softening a strong labor market and putting many people out of work, a U.S. government report on Thursday showed that the number of Americans applying for unemployment benefits last week jumped by the most in 5 months. But layoffs remain historically low. Yields on the 2-year Treasury, which tends to track expectations for future Fed action, eased to 4.87% from about 5.05% just before the unemployment report's release. It had been hovering at its highest level since 2007, the UN.